Welcome back to Alpha Recap. I'm Allison, and today we're breaking down the May 26th market tip in bite-sized pieces. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks, Allison. Great to be here. Lots to unpack from a pretty patchwork day across sectors.
Totally. What really stands out here is that markets close with pockets of momentum rather than a uniform trend. Communications, utilities, and AI-related tech led the charge, while crypto, parts of industrials, and some healthcare names lagged.
Exactly. It was a classic mid-cycle day. Selective risk-on flows into scalable, networked businesses, and selective de-risking where policy or liquidity was uncertain.
Let's start with the winners. Communications and media picked up steam thanks to content anticipation and distribution wins. There was a headline about installs of a low Earth orbit connectivity service on American Airlines jets, and that really tied connectivity to travel demand.
That pairing matters. Airline installs are more than publicity. They hint at ancillary revenue opportunities and real use cases for connectivity and mobility. It's a neat cross-sector echo between telecom and travel.
And utilities. Big day there, too. The California ISO rolled out a transmission plan worth $6.7 billion, and battery storage milestones were highlighted. That gave utilities a durable cash flow story.
Right. And the other thing is that big transmission plans reduce congestion and unlock more renewables. For regulated utilities, that can mean more predictable, long-dated revenue, which markets rewarded.
And on the tech front, funding was the headline. $113 million into OpenRouter and $12 million into Perceptic. Those rounds kept AI and infrastructure momentum alive.
Investors are still underwriting scaling in applied AI. Fresh capital fuels hiring and product rollouts, which can translate into recurring revenue over quarters. Analysts note vendor consolidation tends to follow early commercial traction. And then, on the other side of the ledger, crypto felt pressure. Exchange-traded product outflows deepened to $1.47 billion.
That number kept the headlines loud. What did that mean for flows and sentiment?
Product-level redemptions like that are a direct liquidity drain. Even if there's on-chain accumulation in places, ETFs and ETP outflows reduce traded volume and can compress prices in the short to medium term.
Honestly, I was a bit surprised by this one.
Yeah, that tracks. The regulatory backdrop, spots like the UK and Spain, is adding to investor caution.
Industrials and manufacturing also had a rougher day, with grid stress and specific company legal issues amplifying execution risk.
Exactly. Power grid stress raises the chance of unplanned outages and higher operating costs. For capital-intensive manufacturers, that increases near-term execution risk and can weigh on sentiment.
Healthcare was mixed. We saw M&A chatter and trial wins in biotech, but policy headlines and public health scares kept a lid on enthusiasm.
Policy noise around reimbursement and public health issues creates valuation pressure. Analysts note that until regulatory clarity improves, some subsegments will remain volatile.
Okay, time for a quick list. Give me the top 3 takeaways in plain language.
1. Capital is flowing into scalable platforms. AI, connectivity, and content distribution benefited. 2. Infrastructure announcements, like the $6.7 billion CAISO plan, create multi-year earnings visibility for utilities. 3. Policy and liquidity shocks are the main drivers for speculative pockets. Crypto and some healthcare names showed that.
Perfect. Let's dig into the cross-sector themes. I want listeners to hear how these things link up.
The first theme is reinforcement between AI, content, and connectivity. Funding into AI infrastructure lowers content production costs, and stronger distribution, like the airline connectivity news, improves monetization pathways.
I mean, when you step back and look at this, those threads really amplify one another.
Exactly. Theme 2. Infrastructure spending is bifurcating winners and those facing execution risk. Utilities with long-dated contracts look like durable earners, while some industrials are exposed to grid and cyber risks.
Right. And the policy angle kept popping up. Cannabis rescheduling chatter, crypto regulation, and healthcare policy were all re-rating catalysts.
Policy clarity, or lack of it, was definitely a theme. Sectors dependent on regulation are going to stay more volatile until we get definitive signals.
Short reaction segment.
Big move. Okay, another important chunk. Capital flows were selective. $1.47 billion of crypto outflows versus big venture rounds in AI. That contrast matters.
Yeah, absolutely.
Liquidity begets momentum. Where capital is plentiful, platforms can scale, and markets tend to reward them. Where liquidity dries up, token markets and small explorers get hit harder.
Let's walk through the most significant individual moves and why the market cared. Start with Open Router and Perceptic.
Open Router raising $113 million, and Perceptic raising $12 million signaled continued appetite for AI infrastructure. Those rounds matter because they accelerate commercialization and hiring. And analysts note that early customer traction can lead to outsized market share.
Next, the KISO plan and storage growth.
The $6.7 billion transmission plan reduces congestion and unlocks renewables. For regulated utilities that secure long-dated power purchase agreements or transmission contracts, the result is more visible, long-term cash flow, something markets valued, especially in a higher rate environment.
And crypto, the $1.47 billion outflow.
That magnitude of outflows is a clear liquidity signal. It increases volatility, compresses trade volumes, and tells us product flows are the primary near-term driver of token price action.
Remax Select reported 67% year-over-year sides growth. That felt like a signal in real estate.
Yeah, brokerages can show operational leverage when transactions rebound. Remax Select's growth points to pockets of housing dynamism, even with mortgage lock-in slowing broader mobility.
And the Starlink on American Airlines jets? That pairing really captured imaginations today.
It did. It's a tangible example of connectivity monetization beyond the home. Passenger engagement, ancillary revenues, it's a use case that broadens the TAM for low Earth orbit networks.
Finally, we can't ignore the industrials' legal setbacks and grid stress. Those were real headwinds.
Execution risk in capital-intensive segments amplifies investor caution. Grid stress also raises cybersecurity and resilience questions, all of which can force companies to rethink CapEx and contingency planning.
Short reactions. 2 quick ones.
Hold on, say that again?
Wait, really?
Now, for listeners wanting some pragmatic insights, purely informational, what were the near-term guardrails you'd highlight?
Yes, please. Non-prescriptive, of course.
First, prioritize balance sheet quality where policy or execution risk is high. Companies with stronger liquidity and lower near-term refinancing needs are better positioned against headline shocks. Second, watch funding and contract pipelines in AI and connectivity as leading indicators. Large rounds and strategic customer wins often preface revenue ramps. Third, treat infrastructure announcements as multi-year signals, not one-day events. Interconnection timelines and tariff approvals will determine actual cash flow uplift.
And for crypto and energy?
For crypto, monitor product flows and regulatory announcements. ETF and exchange flows remain the most predictive short-term indicators. For energy, pair supply shock moves with policy wins. Short-term rallies can create trading windows, while long-term positioning should track investments into storage, hydrogen, and carbon capture.
Quick risk watch. What should listeners keep on their radar in the coming days?
Watch DEA rescheduling chatter for cannabis, crypto regulatory headlines in Europe and the UK, any big corporate governance or banking litigation developments, grid and cybersecurity incidents, and major enterprise AI funding or contract announcements.
Before we wrap, remind our listeners of the market structure takeaway in one line.
Capital is being rewarded where scale, recurring revenue, and low marginal cost intersect. And policy or liquidity shocks remain decisive for more speculative or regulation-sensitive assets.
Great! Let's close with the clear takeaways so listeners walk away with 3 points.
1. Communications, utilities, and AI adjacent tech led the day on funding, content, and infrastructure wins. 2. Crypto and parts of industrials and healthcare underperformed because of regulatory and liquidity headwinds. 3. Monitor capital flows, policy announcements, and infrastructure approvals as the high-frequency indicators that will tell you whether today's momentum persists.
Quick reminder, this episode is informational only. Analysts note risks, and we're not giving personalized investment advice or recommending any buy or sell actions.
Right. This is market color and data-driven interpretation, not personalized investment guidance.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly, and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. I'm Allison.
And I'm Kate. Thanks for joining us on Alpha Recap. See you next time.